If you're struggling to make money, stressed about not being able to trade the session, rushing to the bathroom to put on a trade during your workday, then this video is for you. Today I'm going to give you a stress-free, part-time trading strategy that you can make 10% a week with. I'm going to give you a strategy, a system, a blueprint that I've used and still use to this day to extract consistent profits from the market. My hours are slightly different because I have the day to trade, but I know a lot of you guys work all day and still want to be able to get onto the charts to learn, grow, and make some money. So we're going to go through some key elements today. I'm going to share with you the best times to trade if you're working. I'm going to show you what to look for during your session, how much opportunity is available to you, and some mistakes that you can easily avoid, and what I do to manage the risk and make the most profit. So first of all, on the screen right now, these are going to be the trading hours that we focus on. There's two different trading hours. There's going to be one for the morning and there's going to be one for the evening. I know a lot of people work 9 to 5 in the UK. So these are the times that you're going to be able to get online and focus on a 2-hour trading session before work or after work. We focus on sessions. So that's a 2-hour session. And the reason that we do that is because trading is performance-based. If you need to perform consistently, then habits are really key to implement. So doing the same things at the same times every day builds strength through the repetition in your process. You'll start to notice repeatable patterns of price delivery in your session, and that's how you can start to trade your session better over time. So for a full-time worker, my hours I recommend that you trade in the morning are 5 to 7 a.m. This is GMT +1, this is UK time. So if you're in another country, just quickly go to Google, type in the UK times and change it over to your times. Obviously, if you're in another country as well, you might actually be able to get on for the London session or New York session, so you might even get a better trading window overall. So you can apply the same concepts that I'm going to show you in today's video and just pick a better time in the market during London or New York. So 5 a.m. to 7 a.m. UK time is the first session. That'll be the morning session. And then the evening session is 6 p.m. till 8 p.m. Again, GMT +1. You don't need to trade both sessions. One session is plenty. So just pick one that works for you and start to build your routine and your processes around getting to the charts and being focused during that 2-hour session. This is an indicator that you can also use as well. So you see the blue and the gray on the chart. This is just called Forex sessions. So if you just go onto the indicators, type in Forex sessions, and these are the timings, right? So for New York session, I've got it in here. That'll be 00 to 2 o'clock. And that is going to be that morning session. Again, these are all to do with New York times on this indicator. But that will be 5 a.m. till 7 a.m. UK time on the charts, which is that blue indicator that you see. Now the gray one, obviously I'll put it just as Sydney session on here. And that will be 1 o'clock till 3 o'clock. And that's 1 p.m. till 3 p.m., which in the UK, that is 6 p.m. till 8 p.m.
Check out this week's Not Just a Trades community winners.
Next part, 3 days a week, right? Obviously, if you want to do more days, then so be it. You can do more days, but you only need 3 days a week with the strategy that I'm going to show you. I know people have kids, wives, part-time jobs, etc. So not everyone's going to be able to get onto the charts every single day for this strategy. So we'll focus on 3 days a week. That'll be Tuesday, Wednesday, Thursday. These are the most liquid days. And later in the day, you can start to see more moves as well, which will be perfect for the people that are in those later sessions in the second part of the day. Make sure you stick with your sessions. If you focus on Tuesday, Wednesday, Thursday, or if you would focus on Wednesday, Thursday, Friday, stick with it. Some weeks are going to be better than others. It's about being consistent and bringing the right mind to your sessions. So make sure you stay consistent with whatever you decide to do. I have the opportunity to trade full time, and even I don't trade 5 days a week. I only trade 4 days a week. I only observe 4 days a week. It's not needed, right? You don't need to trade every single day to make money. 3 days a week is going to give us plenty of opportunity to take high probability trades and finish the month with double-digit percentage results. Okay, so this is the setup, right? Now we're going to get into the charts. What I'm going to do is I'm going to show you 1 week's worth of opportunities on the charts. I'm also going to show you the pattern that we use to build the narrative from the 15-minute chart and how we enter the trades on the 1-minute chart. You're looking for the same repeatable pattern and process that you'd be looking for if you're trading the sessions. So you're looking for that point of mitigation. So where we get that sideways range, this is where the orders are created. Initiation shows the intention of price. You're looking for price when it gets back into that sideways range at that point of mitigation. You're going to zoom into the 1-minute chart and you're going to play that higher time frame move down into that low to complete that range. initiation, mitigation, continuation, price delivery. That's a completed price cycle in the markets as well. And that's what we're going to be looking for in the session. So if this is a 15-minute chart, we're going to zoom into here on the 1-minute chart, and we're going to look for this same exact price delivery on the 1-minute chart, and we're going to look to get involved in continuations of this higher time frame move. So starting off here on the Monday, obviously now we're looking for our sideways range price delivery. As we can see here, price was contained between this high and this low before price initiated to the upside. So that is our sideways range in the market. So I'm going to draw on that sideways range now. This is where all the orders are created in the market. If you can't find the sideways range, always look for the initiation, which is the aggressive move in one direction. Go back, find the lowest point and find the highest point before price broke out. And that is your sideways range in the market. And this is where we want to look for those OBs, those sell to buy price deliveries. And that's where all the orders are going to be created in the market. And then we can follow the mitigation from that order. So inside the range is where we're going to be looking for our order. So let's go through the time frames. We've got 10-minute. And on the 10-minute, we can see a range between the candles here. So that is our representation of our buy order that we'll be looking at. This is one of two places that price could react from. Or we've got another range that sat below this one as well. So these would be two that I would have on during the session, right? I'll be waiting for price to get into these. I'll be going down onto the 1-minute time frame, zooming in and see if we can get our same repeatable price delivery and then trading alongside that intention. So 1-minute chart. So now down here onto the 1-minute chart, what can we see? Obviously, we've got that sideways range here before price initiated to the upside. Like I said, if you can't find the range, look for the initiation, find the lowest point, find the highest point. That's our sideways range in the market. And we can see that price has reacted out of that sideways range here in the future. So now we can follow this intention during the session, right? So if you started at 5 o'clock, price has seen a continuation here to the downside. We can see that we got that bearish order flow just continuing, range, initiation, mitigation, continuation. Now, if you was looking for sell continuations down into this low, this would be a great opportunity to trade that as a continuation to the downside, down into this low. But when we get down into this point of mitigation, this is where we want to start to be open, right? We want to start to think about what sort of price delivery we're seeing. If we start to get bullish initiations like we see here, again, we can go back, find our sideways range here, initiation. We get that pullback into that range, mitigation and continuation. And that's your first opportunity to get involved in that continuation there to the upside. As always, we look for a safe stop underneath the range low. And this is one that you could have got involved in with a 1.5 pip stop. And typically you are going to get those smaller stops when you enter the trades earlier and later in the day because the volatility is a lot lower during these sessions. And obviously then we can see that that one played out as a continuation to the upside. We always look for 1 to 10 risk to rewards. And that's because we trade during sessions where price moves very aggressively and very quickly and with quite a lot of pips. Now, because the trading hours that you're looking at, you might not see the biggest moves during your sessions. So what you need to do is you need to have a look and go through some experience and see what is the most optimal take profit during your session. For some of you, it might be a 1 to 4. Some of you, it might be a 1 to 5, 1 to 6, 1 to 7. But if you're consistently seeing that price keeps turning around after it hits a 1 to 4, 1 to 5, 1 to 6, 1 to 7, that might become your take profit and that becomes your system. And you've adapted to your hours on the charts and optimize your strategy during those hours. And that's absolutely fine as well. It's good to learn through your experiences and track everything during your session and review your session so that you can continue to improve. So that's a potential first opportunity, just using the concepts and the understanding, waiting for price to get into a point of mitigation on the higher time frame. Remember, we're looking for this same pattern on the higher time frame, range, initiation, back into that point of mitigation, and we're looking for that continuation phase in price. When we get here on the higher time frame, this is where we're going to go down to the lower time frame. We're going to look for the same pattern, look for those bullish initiations in price, go back, find the sideways range, and that is where you're going to place your entry with your stop underneath the low. And then obviously you're going to be looking for that take profit as that continuation to the upside during your session. Again, if you were bearish here coming into the session, you had again sideways range. You look for that initiation in price, the aggressive move, go back, find the highest point, lowest point, entry on the midpoint of the range, stop above the high, and that could have been your continuation there as a selling opportunity. So it's really important to understand the higher time frame perspective first, then go down onto the lower time frame, and then you can look to trade that during your session. So that was the first opportunity there for London session. You can see we got that continuation there to the upside. Price never continued, right? We got this new sideways range here. Remember, we're looking for that initiation in price, aggressive move in one direction, go back, find the highest point, find the lowest point. That's the sideways range. This sideways range initiated and created this low. We pull back into that sideways range here. We got that mitigation. and you can see what price delivery, what phase of the market we're in. We're in that continuation phase of price, which is this aggressive move. So if you're trading later in the day, you're either going to look for that point of mitigation or you're going to look for that continuation phase in price, and you're going to trade the M1 continuations to the downside. So we can see that we're in that continuation phase. So if you're coming into the session between 5 and 7 o'clock, all you're doing is looking for continuations. So let's have a look at that now. Down here on the 1 minute chart, again, we're just looking for any RIMC continuations. As we can see straight away, just before the session, we've got that whole sideways range here. Before price initiated to the downside, again, look for the initiation within price. Then you're playing that pullback and continuation. Now, if the entry was at the 50%, stop above the high, probably wouldn't be able to get involved in this trade. But what you can do is you can wait for the reaction and you can play the continuations away. You have your higher time frame direction, so you know you're only looking for selling opportunities. And here, what can we see? We can see that we had an initiation to the downside, price pulled back into the sideways range here. And this would have been your first opportunity to take that as a continuation to the downside. Now, if you missed that trade and you waited for price to break out and you looked at this range here and you ended up getting taken out of that trade, so be it. That's absolutely fine. That is normal. That is a part of the system. Not every single trade is going to play out, but then you did have another range which was sat just above here that you could have played either as a reaction or you could have taken it on the reaction of the candle here to the downside, and that one would have played out for a continuation to the downside. So you can see that during the session, there's multiple opportunities to get involved in the moves as a continuation. The most important thing is just understanding the direction of price and then following the order flow from the ranges that you can see during your session to trade the continuations to the downside. It's really important to have 2 trades a day maximum. Having consistent risk management is what's going to make you the most profit in the long run. It means that your losses will be capped small and the winners will always push you further into profit. I suggest that if you hit your daily risk, shut it down, learn from the session and come back another day. Take away your temptation to overtrade and to try and make back what you've lost. So that's another addition to the rules. 2 trades a day max, and use our system, right? Observation, execution, hindsight. Come to the session and observe, understand, execute, and then learn from your session in hindsight. And this system only works if you do have risk management. It's a really important part. Risk management stops you from going into massive drawdowns and stops you going into tilt. So as we can see, we would have followed that bearish order flow here to the downside. These are opportunities to get involved in the moves. Again, this one potentially would have been a loss if you got into that one. We also have a sideways range here. So plenty of opportunities to get involved in the moves. This one you wouldn't have got involved in because there's no entry here. This one was a beautiful entry, stop above the high for a 1 to 10 continuation to the downside. If you missed that one and you got taken out here, you did also have another opportunity to get involved in one here as a continuation to the downside. So again, we're only in Monday, and obviously already we've got plenty of opportunity in the markets to play continuations to the downside. So there's no excuses to not be able to get involved in the markets. If you're working, it's about coming to the markets, sticking with your system, understanding the moves from the higher time frame to the lower time frame, and then getting involved in the high probability trades in your session. So let's go back to 15. Okay, so we move into the next day, we move into Tuesday. As we can see during the session, we saw that continuation from yesterday. Now we're coming back into this very large sideways range. So we know inside this area is where we're going to be looking for price to mitigate out from. So all we're going to do now is just look at the low point where price has reacted from before the session here, because that's where we can follow that order flow in the session. And we're going to go back and zoom into this area to see the sideways range. So we're down here on the 1 minute chart and we can see that we have a doji candle or an inside bar as well. So this will be that buy order in the market that price is reacting out from now. And this is the order flow that we can then follow here in the future. So we can see that that's where price is reacted out from. So again, we're just going to go back down here to the 1 minute chart and zoom in during the session. And we're going to follow that bullish order flow in the market. Okay, so we're down here on the 1 minute chart. Session starts at 5 o'clock, of course. But as we can see already, we've had a structure break here, showing the intention of higher prices at this point of mitigation. And as we can see, if we go back and find the initiation in price, we can find the lowest point, the highest point before the breakout, and that is our sideways range in the market. So we've got sideways range, initiation. As we can see as well, we've got stacked liquidity here. That's something for price to target following the bullish intention. We get back into that point of mitigation here. Momentum shifts here and we get sideways range, initiation, mitigation, continuation during the session. So if you didn't want to enter this as a reaction here with your stop underneath the low at the 50% of the range, The safest stop is going to be underneath this swing low here, but if you wanted to use the range low, this would have given you a nice tight stop. So that's your first potential opportunity for the session. If you missed that one and you didn't want to take that as a reaction and you wanted to take it afterwards, we do also have another sideways range here. Again, look for the initiation, the aggressive move, which is this move here. Go back, lowest point, highest point before the breakout. And this is another opportunity you could have looked to trade for a continuation there to the upside. So you can see already 2 opportunities during your session to get involved in that continuation there to the upside. The earlier in the move, the better. And all we're doing is just following that same process, looking for that higher time frame mitigation on the 15-minute, looking for the structure to be shown, the intention to be shown in the market. And all we're doing is just playing that pullback continuation, following that same price delivery that we always use. Range, initiation, pullback, mitigation, continuation. Look for the initiation in your session, wait for the pullback and play that continuation, trading with the higher time frame momentum. So we're 2 days in, and obviously you can see the amount of opportunity that we've got just in 2 days worth of opportunity. And that's if you're only trading for 5 till 7. Now let's look at the evening time. So now we're down here on the 10-minute chart. We can see that price saw that pullback into the sideways range that we saw here during the session. Again, it's really important to understand the flow of price. That means going back and understanding what price has done to lead to the current point during your session. So we can see that the trade that we took just became a pullback for a continuation of this bearish range, initiation, mitigation, continuation here to the downside. That moved price deeper into this sideways range here. And as you can see, we got that sell to buy price delivery inside the range here, and now price has just reacted from that before your session. We can see again, initiation. Again, we always look for those initiations in price here. That showed a break of structure, which shows intention of higher prices before you even get to the session. Then we can see as well, we've got that whole sell to buy price delivery during your session as well. And price is just in a sideways range at this point. We can very clearly see that price is contained between this high point and this low point, and price hasn't broken out. Now, when we're in a sideways range, we have high prices, low prices, and we have middle of the range. Middle of the range is the slaughterhouse. This is where you want to stay away from. But if prices at low prices or high prices during your session, these are the best opportunities to look for those RAMC continuations. So if we just zoom in here now as well on Tuesday, we can see that all we're looking for is those initiations in price, those aggressive moves in one direction. We have our direction because we're coming from a higher time frame mitigation. So again, during the session, we're just looking for those aggression and speed moves in the market. So we already would have had a range here, initiation, mitigation, continuation we could have played, and it's at a buy low location. So let's go down onto the 1-minute chart and see what opportunities we could have played. And if we missed that opportunity, what other opportunities could we got involved in with a continuation to the upside? So now we're down here on the 1-minute chart. We can see that intention of higher prices has been shown on the higher time frame. Again, we're looking for that initiation in price. Before the session, we go back, we find the lowest point, the highest point before the initiation, and that is our A to B price range. Now we're looking for price to pull back into that mitigation, and we're even going to take that as a reaction here with our stop underneath this low, which I'll show you now. At 50% of the range, stop underneath the low, that's going to be your safest stop, and we're playing that as a continuation here to the upside, or you're going to wait for price to react, and you're going to play a continuation away. Now you can see that if you waited for price to react out of this range, there was no continuation in this move. Price just ended up continuing. Price did react here, but it didn't react from any sideways range that we can recognize here. So unless you was more aggressive and you took this as your range, initiation, mitigation, continuation, this session might have been a sit out session if you wait for the reaction and play the continuation away. Obviously, if you play this as a reaction, this would have been a great trade for you to get involved in with a safe stop, playing a continuation of the momentum. And we're just following, again, the same process. Sideways range, initiation, back into that point of mitigation on the higher time frame. This is where we zoom in on the 1-minute chart and we follow that bullish order flow and we look for those initiations in price, those aggressive moves, because then we know that we can play that continuation, which is that next aggressive move in the market. Okay, so we're back here on the 15-minute chart now, and as we can see, that ended up playing out for a continuation to the upside. This is why it's so important to trade out of higher time frame mitigations, zoom in on the lower time frame, because then we're anticipating those bigger moves in the market. So when we're entering those trades on the 1-minute time frame with safe stop losses on the 1 minute, we're anticipating that next expansion in price, which is that next move after the initiation comes the continuation phase, and that's going to be that aggressive move. That's where we can make money very, very quickly in the market, just by anticipating that next move. Okay, so I'm going to show you one more day now within price. And as we can see, we got that continuation to the upside. Where did we mitigate out from? A sideways range. Again, we got a sideways range here. Price is contained between the low and the high before we see that initiation to the downside that created this low. When price came back into that point of mitigation, this is now that continuation phase in price, which means price should be targeting this low down here for a continuation to the downside. So we have our direction now. It's just about going into the session, waiting for a sell continuation to get involved in, and then we can look to play it. So as we can see, moving into Wednesday, we got price initiating here to the downside, which is in our direction of the RIMC to the downside. Remember, we're in this phase of price. It's not necessarily always going to be a straight down or a straight up movement. Sometimes it gets there a little bit slower and it moves in more of a trending fashion, which is what we're seeing in the price here, where we've got that low, high, lower low, lower high, and lower low in the market here as well. So all we're going to do now is just go back, find the highest point, find the lowest point before price initiated to the downside, and that is our sideways range. And all we're going to do is zoom into this point of mitigation here, which is this one here on the 1 minute time frame, and we're going to anticipate that next move in the market to take out the low for continuation to the downside. So let's have a look at that now on the 1 minute chart. Okay, so we're down here on the 1 minute chart. This was that sideways range that we were just looking at on the 15 minute. That's the highest point to the lowest point. We can see that aggressive initiation here to the downside. We go back, highest point, lowest point. That's our sideways range that we're playing out from. We can see that during the session, price initiated to the upside right into that point of mitigation. And we can see that we had momentum shifting here to the downside. And what did we get? We go back, we look for those initiations in price, those aggressive moves in one direction, following our bearish narrative on the higher time frame. What did we do? We find the highest point of the initiation. We find the lowest point before the breakout. And this is where you could have looked to get involved in that continuation there to the downside. Again, we see that continuation, price break structure. We see the initiation, go back, find the highest point, find the lowest point, 50% of the range, and that is your continuation entry for the session. Right at the end of the session, stop above the high on this one with a 2-pip stop. And as we can see, we got that continuation to the downside. Now, like I said, we look for 1 to 10s during our session because we normally get those bigger moves in the market. Now, if you consistently notice that your session doesn't go to 1 to 10 and you want to take a 1 to 5 or 1 to 4, 1 to 6, 1 to 7 during your session, this is where you can take those smaller risk to rewards and still finish the session in profit every single day. And again, we're just following the same process. All we're doing is looking for sideways range, initiation, point of mitigation on the 15-minute chart. So this sideways range, this is where we know that orders have to react. And we're anticipating that next continuation phase down into this low. We're just zooming in on the 1 minute chart here. And we look for that same repeatable price delivery on the 1 minute chart. Look for those initiations, go back, find the sideways range, midpoint is your entry with your stop above the high, playing a continuation to the downside, which is all this price delivery is here on the left. And that's how you're going to find those repeatable and consistent entries during your session. So let's go back to the 15-minute chart. And as we can see there on the 15-minute chart, that would have been a continuation to the downside. And we can see during the day as well, we even got continuation to the downside. And we got a sideways range here. We look for initiation, go back, find the highest point, lowest point before the breakout. And we got mitigation and continuation there during New York session as well. So now we can see that we got that continuation. We're just going to do one more session. And as we can see, we got initiation here to the downside. As we always talk about ranges between the candles, this is the lowest point and the highest point between the candles before price broke out to the downside, which is another representation of this range and initiation. We can see that price pulls back, but we can see how slowly price starts to pull back, right? Every time we're running above these highs, we're moving very slowly back into this point of mitigation. That's showing momentum rules are still bearish, which is one of the concepts that we can show you at NGAT. So we know that when price gets back into this sideways range here, this is where we're going to be looking for our bearish order flow pattern to play a continuation of this bearish momentum on the higher time frame. So we have our higher time frame range initiation. We're at that point of mitigation here during our session. So now all we're doing again, is looking for that continuation during the session to the downside. So let's zoom in and have a look at that now. Okay, so we're down here on the 1 minute chart. What can we see? Straight away, we can see that we had a momentum shift. Price became bearish. Again, all we're doing now is just looking for those initiations in price. We go back, find the lowest point of the range, the highest point of the range before the breakout. And this is our first opportunity to get involved during this session. Again, you could have had a very tight stop here with just over a pip. Now, if you wanted to play it at the open of the range, that's fine. That's still a 1.7 pip stop loss. And then you would have got a great opportunity to play a 1 to 10 continuation. If your take profits are a little bit smaller at 1 to 5, 1 to 7, so on and so on, this would have been another great opportunity during your session in the evening to play that as a continuation. If you missed that one and you didn't get involved, again, wait for the next initiation. Here, go back, find the highest point, find the lowest point, and that's your new sideways range. This is another opportunity to get involved in price. Again, your stop would have been slightly bigger on this one at 2.3. And again, you would have played that as a continuation to the downside. If you missed that one, what do? You wait for the next initiation in price. Here, as we see, aggressive initiation, go back, find the highest point, find the lowest point here, and that is your sideways range again. So you can see the abundance of opportunity you would have got in your session here just by playing this bearish order flow pattern, again, out of a higher time frame mitigation at a point of mitigation here, and playing that as a continuation to the downside during your session. This is all we're doing, just the same repeatable thing every single day. This is what we do during New York session and London session, and there's no excuse for you not to be able to do this during your session. You have the exact blueprint now. Don't ever go over 2% risk. Make sure you're consistently learning and improving from the data, and take a picture of all these entries and make sure you revise all of the entries so that you can make sure you stay consistent and sharp and you can get involved in all the entries during your session. Okay, so like I said at this start, I'm just going to go through some mistakes to make sure that you guys avoid. Over trading, number one, make sure you don't ever go over your 2% daily spend. Otherwise, you could easily go into make it back mode, and that's where you start to destroy all of your progress that you've made over the week. That also destroys your self-image. And like I said at the start, strength is gained through repetition. So you want to be consistently applying good habits and making sure that you're repeating them on a consistent basis so they're strengthened day after day. Trading outside of your session, this is a mistake to avoid. Make sure you do wait for your session so that you can come to your session and you're at your absolute best during that 2-hour session. There is an app called Cold Turkey. If you can't be disciplined enough to trade during your session, what you can do is you can add MT4 to Cold Turkey, and that basically locks it during a time period so that's only open and available during your session. Taking trades that are not within your trade plan, again, out of frustration or lack of patience, wait for the setups. They will be there. We've only gone through 3 trading days in a week, and there's 5 potential trading days. There's going to be opportunities, so just wait for them and just be patient for them. And just final words now on improving and gathering data. Make sure you stick with your session. Make sure you journal every single trade that you take. Make sure you're reviewing the markets on a weekly basis and seeing how you can always improve your system. And that's going to be it for this video. If you did enjoy this video, make sure you leave us a like and comment. And if you want to find out more about how we trade these markets with precision, visit our website at notjusttotrade.com. You can also find us on Instagram at notjusttotrade. Thank you all for watching, and we'll catch you guys on the next video.
Let me take you back to a time when love was as precious as diamonds, where if you search you would find it.